All right. Back to work tonight, guys. Thursday evening. Happy St. Patrick's Day, March the 17th, 2022. My name is Joseph. As always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades. Setting up for Friday. Not just any Friday, quadruple witching. All four asset classes expiring. End of the week. Got a big Friday coming right around the corner here. Want to make sure you are ready for the action. I got a lot we're going to cover tonight on this video tonight. Got a bunch of trades setting up here on our radar. Boy, oil caught a big run higher and got some really fun ranges on the Emini and the Nasdaq we'll talk about in tonight's video. And speaking of tonight's video, I'm going to cover all my favorite trades setting up for Friday's trading session. That way you can finish the week firmly in the green. I'm also going to talk about some stuff to avoid tomorrow because you can definitely tell, especially the E-minis, there could be some traps waiting there tomorrow, and I want to make sure you know how to avoid those traps and be ready to capitalize on them to make some money on quadruple witching end of the week Friday's trading session. I'm going to break down all my favorite trades here in tonight's video, so make sure you watch all the way through. Before we jump in though and get the party going tonight, got a lot to cover in tonight's video. You better subscribe to our YouTube channel. I publish this video with my best trade ideas for the following day every evening on this channel, so make sure you subscribe. Hit that little bell icon, right? That way you get notified every time I publish something new, because a lot of this stuff is very time sensitive. And don't forget too, if you have any questions, drop those questions in the comments section. I do personally answer all these questions, so don't be shy about asking questions in the comments section. And if you guys enjoy the video as much as I enjoy making it, if you tune in every evening to get your mind right and get those charts right for tomorrow's trading session, hit that like button for me. Appreciate you guys carving some time out here on this video. But enough of the intro though, right? Friday is right around the corner. Let's get ready for, quadruple witching. All four asset classes. It's kind of like OPEX on steroids, right? Tomorrow, as we go into the end of this third week of the third month of the year 2022. All right, so what we're looking at here right now, everything's pretty bullish right now, as you can see, right? Get a bull market on the S&P, bull market here on the Nasdaq, and a very kind of calm as a bomb, right? Bull market here on the oil here today. I'll tell you we definitely have some good buying opportunities right now. Would love to buy some dips down in the base of this spiking channel on the oil. Would love to buy, right, some pullbacks into my battle zones here, my buy zones here on the E-mini at S&P and the Nasdaq. So there definitely are no shortage of buying opportunities for us here for tomorrow. And I also think, the oil is probably the most difficult one to want to sell short right now, but I think there's a lot of pretty good, reliable short setups, especially on the Nasdaq. The Nasdaq really, and you'll see what I'm talking about tonight. I would love to short a double top reversal off the high, double top reversal off the high. That could also go for oil as well. So I've got some nice short setups I'm watching. I got a bunch of ways we can make some money selling off those kind of double top reversals there. And then I'm going to show you tonight, because I think these pullbacks here on the S&P and the Nasdaq, we'll see what happens obviously, but I want to make sure that you're ready to be able to capitalize on this if these pullbacks turn into full reversals, because we got those ranges that we started the day with today. Same thing with the oil as well, right? So I'll tell you, the next pullback here, there's some really interesting stuff setting up here on the E-minis, the S&P and the Nasdaq, and oil, of course, right, being propped up here because of the situation in Ukraine. So I'll tell you right now, there is tomorrow maybe options expiration, maybe quad witching, but there are no shortage of really good, exciting trades here for tomorrow. Now, we're talking about tomorrow, so why don't we jump in here and just make sure we're all on the same page here right now. We have tomorrow is the third month, and remember, it's the third month of March, third month of June, third month of September, and third week of March, third week of June, third week of September, and of course, third week of December. So third Friday of every 3 months, we are right in the thick of it here as we go into tomorrow's trading session. Now, why does this matter to us? If I could kind of summarize what a quadruple witching is usually all about, it's not usually low volume. It's actually usually pretty good volume. But what happens is, because all four asset classes are expiring, the market tends to chop a little bit more. Right? We'll get a direction either up or down, right? But the market tends to chop a little bit more, which tends to make this a little bit more of a challenging day to trade. So tomorrow, just be aware of that. Hopefully I'm wrong. Hopefully we have a nice, easy-going day tomorrow in the trade room. But just be aware of that, right? Because you get all four asset classes expiring. People who use the futures markets for hedging purposes, right? If you run a big trading firm with stock positions, equity positions, right, cash positions, currency positions, you'll use the futures markets to hedge those positions, and that's where things get a little bit crazy on non-farm Friday. So, or not non-farm Friday, but quad witching Friday. So just be aware of that for tomorrow. Might not be that bad, right? Might not be that bad, but typically though, we tend to see markets kind of, there's a lot of volume. It's moving, but it tends to have a little more chop to it than other days of the month. And of course, tomorrow's a Friday, so you got to remember, trading is like riding a bicycle. It's easier when it's moving. We saw some relatively slow personality markets here today. If that continues tomorrow, don't force it. Save those bullets, save your ammunition for next week, because we come back next week, right? We'll have a brand new week, and so it doesn't make any sense to force bad trades or force good setups in bad conditions tomorrow. So just be aware of that. And again, right? Hopefully nothing to worry about here for tomorrow, but that is usually the case here on a quad witching Friday. Now, as far as big news goes, we do have the home sales number tomorrow, but I doubt that's going to be the big market moving event right now. Everybody, you can obviously tell right now, oil caught a bid. Everyone's kind of waiting for that next kind of shoe to drop, the next update from Ukraine. We saw today oil catching that bid today, so it was obvious that people were starting to grow weary of these peace talks they've been talking about, and the U.S., like I said yesterday, committed to sending more, everything, right? More supplies to Ukraine to fight against Russia. So it's obviously still going on. It's keeping oil propped up. It definitely propped up the S&P and the Nasdaq today, but you'll see why that may not hold here for tomorrow. One interesting thing about tomorrow we have a call between the U.S. President Biden and the Chinese, I guess President or Premier Xi, right? So we have the leaders of the U.S. and China on a call tomorrow. I would assume that's going to be relatively early in the day. Those could possibly be whatever headlines we get out of that phone call tomorrow could definitely be some of the biggest catalysts that we see here. So I don't expect the news number that I don't expect that home sales number to be that big of a deal for us tomorrow. Remember, be careful if it's slow tomorrow. Don't force trades if it's really slow tomorrow. Trading's like riding a bicycle, and we'll definitely have our ears open tomorrow, eyes open tomorrow for any updates we get out of Ukraine, or of course that phone call between Biden and Xi. I would assume tomorrow morning. I would assume pretty early tomorrow morning. So we should hear more of that tomorrow, just before we open up our trade room. Again, quad witching, right? Quad witching Friday. Be careful forcing trades in real slow price action tomorrow, because you'll regret not saving your capital for easier days coming next week. Let's get back to our charts though now. S&P's ready, Nasdaq's ready. Oh, the oil is always ready. Crude oil is a pretty easy one tonight. We'll talk about that here. And keep in mind too, guys, whether you trade one of these markets or all of these markets, I'm going to be giving you learning opportunities, money-making opportunities, loss avoiding, right, lessons throughout the entire video here tonight. So if you're serious about your trading, if you're taking too many losses, or you're not making as much money as you want right now, definitely make sure you watch the entire video, because even though a lot of these charts are similar, I'm going to keep it spicy here in this video, and you'll learn new things in every single market as we go. Let's start first here, as always, with the S&P 500. What's the most important thing going on right now on the Emini S&P? If somebody asked me, how would you describe this market? I would say, well, we began the day, which it wasn't apparent right away, but by the end of the morning, it was pretty obvious. This is one big trading range. And this didn't come as a huge surprise, because we had, right, that big run up yesterday. And so we kind of talked about how we should probably expect to see a range. We had that nice deep pullback, as we talked about in last night's video. And so basically the day begins off in a range here. Now what happens, of course, you can see here, is that we get a breakout. right? And as we always kind of remind you guys, the breakout leg is used as a measuring leg, right? So breakout leg 1 is used as a measuring leg. And if you've taken any of the video courses here at School of Trade, you know that trends like to give threes, right? They love the number 3. So 3 legs up, 1, 2, 3, right into that measured move. And you can see it looks like there's another range right here. This range is a very important part of this chart right now, because as you can see, we kind of got tossed around inside that range, and now we spit right up. And you can see, right, we're starting to come back down off of that high. Now, this is I think this is one of the most, this could really be the most important thing as we go into here tomorrow, right? Because buyers right now, buyers would love to buy at support levels below this trading range, right? We get a little channel down here, prior swing high right there. So it's not difficult to think that buyers would love to buy a nice deep pullback, right? Down inside these support zones below this range, acting as a magnet. So the buyers have a great shot here to buy off this, right, off this support area. But remember, one thing about this though is when markets, when they kind of whip, or they, as we call it, when they rotate off the high, right? When they rotate off the high of a trading range, oftentimes this momentum can be really strong. And with this range below us, which was kind of the big magnet for today, it isn't very difficult to think this market may end up slingshotting and really whipping all the way back down into that trading range. So buyers would love to buy down here. But guys, I think the way it looks right now, there's a good chance here we might end up looking for shorts on the way back down. So we'll talk about that here in a second as far as kind of where we can look for that. Sellers have a lot of opportunity right now. Let's say we go back up to retest the high here, that double top, kind of reversal with the range acting as a magnet up around that. So I love that. I love that short off the high here. And of course, right, we could talk about what a breakout would look like, because there's a ton. Look at this open space up here. Just keeps on going, right? The next level of resistance is way, look at that. It's way up there. So that 4,500, obviously that may not happen tomorrow, but there's plenty of space up there if we can crack through this 44.11, which of course is some pretty significant top, right? It's a pretty significant top over there, all the way over on the left-hand side of that chart. So, I'll tell you, there's good trades on both sides of this, but as you can see here, though, I think it does look like the sellers, unless these buyers can get a breakout here, it looks like the sellers might have a little bit easier job here on this thing, at least right now, until something changes. So let's talk about this. How do we make our money on the S&P here? And I'll tell you right now, when you see the Nasdaq chart, you're going to see it looks a whole lot more bearish than the Nasdaq, right? Take a mental picture of this chart right now, because when we go to the Nasdaq, you're going to be like, oh shoot, yeah, it's Nasdaq's difficult to buy right now, just looking at the chart right now. Okay, as we go lower, right? As we go lower, how do I buy it? How do I sell it? Now, what you want to remember is this is a very specific situation where we have a range, but we're rotating off the high. So what you want to do as you get down here, I get my pendulum swing waiting down here, right? The amount above, the amount below. You can't look at this chart and not love this area, right? It's a great support area there. Lots of support down here. The problem again, though, is that momentum swinging off that high. So as we come down off this high, this is exactly where you want to start using that two-try failure pattern, right? That two-try failure pattern where we let the bears try once, bears try twice, and we just look to buy literally right into those stop losses for a move back up to the top of that range, and then a move back up to retest that high, right? That'll be the way you want to buy this thing as it comes off the low. How would I sell this thing, though? There's a couple different ways you can sell this. For example, I think one of my favorite ways to sell this right now would be if it rolls lower here and we start seeing something like this, where it starts to get that strong move down, shallow pullback, lower low in price. You would think there's going to be a lot of bears here that be looking for what we call a two-try trap pattern, right? And then you know me, right? I love to go out and find those hidden channels by drawing off the lows, up around the high. Like, that's a really juicy short setup here. And again, it's kind of capitalizing on the idea that as that momentum rolls over, we may get this thing to start to kind of, grind down there and that trap off the high of that channel. Now, guys, we talk a lot about traps in this video. We trade a lot of traps in our trade room. Now, I'm sure most of you guys have taken that free trading course on our website. You've learned about traps. You've learned about failures. You know the rules. You've taken the class. If you're one of the few folks right now watching this video, maybe you're here for the first time right now. If you haven't taken that free trading course yet, you definitely owe it to your P&L, right? I would definitely encourage you, grab that course. I'll put a little link up here for you in the upper right-hand corner. If you're sick and tired of missing the best moves of the day, or you're taking too many losses, or maybe you're like I was when I was a new trader and you kind of have some anxiety while you're trading, not having a roadmap to follow, I provide a full roadmap of how we trade every morning in our trade room. I provide all the entry setups, how to find all these hidden channels and trigger your entries, which trades to take, which trades to skip. Again, it'll give you the whole roadmap there. So definitely grab that free course link that popped up there. You're going to love that free class. It'll give you the roadmap to follow, and you'll see a lot of good examples here. Now, I would also think too that if the market was to kind of pop and grind, right, kind of pop and grind down like this, which could easily happen, right? The buyers liquidate, market grinds down. Just keep in mind, right, if we can get that pop up, look for that little first test, right, off the high of that channel, little trap, little failure pattern off the moving average, and that pullback setup right as we go. Again, when you take that free trading course, you're going to learn all about these entry setups, how to find them in that class, right? So trap, buyer failure, right, and of course that pullback combination. Where does this market want to go, you think? Yeah, it's going to want to go back down, right, to retest that low. So I really, again, I'd like to get this thing to pull back 1, 2, and back up again, but don't be surprised here if it kind of starts to roll over here, right, as it goes, and all of a sudden here, we've got ourselves a really nice short right off that high going back down into that trading range. What if we go higher here, right? What if we go higher? I'll tell you almost hope we go higher right now because there's a really good trade setting up for that double top reversal. So again, we know there's a channel right here. We know there's a lot of support right here. So let's say we take it lower. The bears try once, bears try twice, find that little support trend line, right? And we buy into those stop losses, right? So now we end up back at that high. Right? Now we go back up. The buyers retest the high. Now at this point it's kind of mission accomplished here. We still have the buyers, the range below us as a magnet. We're still at a major area of support, of resistance here now. So what I'll do in these situations is I love it when I see a nice strong bull run that double tops, right? We'll buy that pullback. They double top off the high, and then buyers start to struggle. They try once, they try twice. All their stops now, think about it, all their stops are sitting right below that low, and you can just dump it right off that high with a 2-try failure pattern. Now remember, your job is not done yet after this. At this point now you got to think, right, a move back down into that range below you is very likely at that point. And so now what I'll do is I'll go grab that new trend line, mark it off that low, mark it all the way up at that big top, and then look for that first pullback, right? As we always say in the trade room, that first test is the best test. My favorite place to short those bounces is right off the top of that channel, and I always like to look for those little prior swings to rope in, right? Those little trap setups. Could be a trap, failure, pullback combination. So we definitely have that going for us here. Again, would love to short that double top off that high. And again, I don't just simply sell the double top. I wait for the buyers to kind of dig their own grave, if you will. You know what I mean? I let them try a couple times up there. That will give me those stops. And once those stops get hit, bam, it's like a firecracker goes off and it just rips lower, making easy money on the short side there. Keep in mind too, this range may develop more here overnight, so stay out of the middle of that range, and it's pretty much the same exact game plan as we go. Now, what if we go higher here? What if we go higher here? Why don't we talk about that on the Nasdaq, right? Let's talk about a breakout in the Nasdaq. We'll keep it moving here tonight. But be aware that we do have some pretty serious resistance here, right? So we're gonna have to get a pretty good breakout here. We'll talk about some breakout patterns in the Nasdaq. And again, I mean, look at this. It's like it's wide open space on this on the S&P. There's not a lot of targets as we go higher here. I'll give you a game plan though here on the Nasdaq. Let's grab the Nasdaq here now. Nasdaq is very similar to the S&P, but as you're going to see right away here, you're going to see why I say the Nasdaq looks a lot more difficult to want to buy this next pullback. So somebody asked me, okay, what's going on here, Joe? What's the key component here on the NQ? Again, we have a trading range, right? It wasn't obvious at the beginning, throughout the morning, but towards the end of the morning, we began to realize here, once they went lower, higher, lower, it was pretty obvious this was a trading range. We had that big run up yesterday, right? That big run up. So we kind of knew we were going to get that deep pullback, right? Get that failure, that pullback combination. We talked about this last night on the video. So hopefully you were watching last night, and hopefully you weren't trying to short that thing as it went lower, because I tried to warn you about that last night. Anyways, so we have the trading range, right? Mark kind of runs around left and right. This range might be a little bit bigger, a little bit smaller. It's tough to tell exactly where it is. Then we see a breakout, right? Breakouts love to use the first leg as the measuring leg. We go 1, 2, and 3 legs up. Makes perfect sense, right? Trends love the number 3. So we could definitely see that. And we can certainly see here now this trading range, right? And we're very, very similar to what we saw on the S&P, and the fact that we've got the range, we pop up, and now, unless these buyers could hold this for a breakout, which they definitely might, we'll talk about that in a second, we have this market now potentially swinging all the way back to complete, we call a pendulum swing, right? Now look at where this pendulum swing puts you. Look at where that, remember, on the S&P, everything was lined up just beautifully, right? And this is not as good, right? Look at the channel coming down here, right? Got my channel drawn off those highs. Look at the channel is. Well, more importantly, look where it is in relationship to these highs, right? So now, as we complete the pendulum swing, as we complete the expanding triangle, now look where we are now. Now we're kind of stuck right in that little area here. Now again, it's a bull market right now, and I will look for that long side, right, set up going higher here. But as you can see though, this looks a lot more difficult than we saw on the S&P. We have what could easily be a lot of momentum rotating off that high, and we may get kind of pinched right underneath this area, whereas the S&P could easily use those support levels and buy off of it. Every once in a while, you'll see the Nasdaq or the S&P kind of lead the other one, and it kind of opens up your eyes to, oh, wait a second, that might be what's really going on here. And that's a really big clue in my eyes. So again, we have kind of the same idea here on the Nasdaq, right? We pull back. This even more important, right? This one's even more important here. Get those bears to try a couple times, right? Really try to lock them in, because they'll be trying to short off that top. Once they get locked in, think about now where all their stops are, right? And we can now, of course, buy right into those stop losses. Now, guys, I do have a few more trades I want to talk about for ranges. Oil is very likely to go range bound tomorrow, so I'm going to talk a lot about range plays on oil tonight. I won't cover those right now, but you'll see what I mean, right? We'll go into a lot more detail on trading a range on the oil chart. So again, even though these are very similar right now, they're different, and they'll be different. Again, money making kind of lessons here on each chart here for tonight. So again, we pull back into support around the low of that range, bears once, bears twice, buying right into stop losses. I'm going to give you a few more follow-up trades on this on the oil, so you're going to want to watch that as well. And then again, if it starts to roll over here, right, either we see a shallow pullback, lower low, like that is what I'd love to get. If I had my way tomorrow, that would be the short I would get here. Right, again, mark up that low. Now, I'll be honest, we don't need that channel. You don't need that channel, but come on, right? I mean, it won't hurt, right? The big difference on this is that maybe you're wondering, if you're watching for the first time right now, what's the difference here? Here's the difference. The difference is we pull back, the bears try once, the bears try twice. We're making double bottoms or higher lows, right? That's the difference here, right? We run lower, right? The bears once, the bears twice, back up, right? Or we go lower and now we roll over, right? We roll over, we go lower here now. It's a very subtle difference, but boy, is it important, right? Boy, is it important. Now that lower low now at this point now it's much more difficult because again, in this case, we're underneath this level now. So it's just not as reliable. And again, we got that rotation off the high there. So again, that's where this becomes really, really valuable. That lower low now just opens everything up here for those bears. Or again, if they make that move lower, we don't get any of that, right? The market kind of starts to grind down. It's a liquidation move here, right? And then we remember on this one, you want to really draw that channel really tight. You know, we saw an example of that today on crude oil, if you recall, right? You had to really, because oil popped up, right? And you really had to draw that channel tight, right? We talk about these quite a bit on this video. So you draw that channel really tight, bring it up around that big top, right? And then look left, and you want that first test. That first test is where the money is. All right, and we know where this thing wants to go here, right from there. So I would love to get that short going. I don't know if we're going to get it or not. You know, I don't know. This market obviously caught a bid today, which didn't really make a lot of sense because of the whole situation happening right now in Ukraine. But hey, you know, I don't ask why. I just trade the darn chart. That's all we got to do here as traders. Again, if we do go sideways here, stay out of the middle. I'm going to talk more about sideways action on the oil chart here. Selling off the top. Yeah, easy. Great short here. We pull back. We double top. Right? Buyers try once, buyers try twice, stops get hit. We find that new channel, and what? First test is the best test, right? We sell that first. We trade the turn, as we say in our trade room, right? We trade the turn, right? Buyers try once, buyers try twice. Why twice? Because we're bullish. You know, it's not a bear market. You know, you can try to play the whole pick a top game if you want. But a lot of times what happens when you pick a top, and you probably know this already, you know, you pick a top, you get short, your stop goes right here, right here, and what happens? It goes right up, stops you out, and comes right back down again. You know what I mean? That's the challenge of trying to pick those tops. They can be very difficult, and you end up getting stopped out right, you know, one or two ticks after you stop, and it rolls right over. An easy way to avoid that is to use a failure pattern, right? Wait for it to go up, and again, because we're so bullish, let them try once, try twice. Now you know, right? Now you know where their pain is. Now you know where the easy money is. You can short this sucker, right? Draw a trend line there, sell off that trend line. You'll see a lot of examples of different variations of these two try failure patterns inside that free trading course I mentioned earlier. All right, let's talk about breakouts on the Nasdaq, right? Because the Nasdaq, you know, the S&P is kind of right up into that level of resistance. As you can see, the Nasdaq has quite a bit of open space, right? And then they get this big top up here. So this is definitely on our radar for tomorrow, right? This whole area right here, that 267 right to 14,387. That's definitely going to be an important part of this in my eyes here for tomorrow. So you can definitely see the buyers again have control of this. So what would a breakout look like? Well, first of all, one of the most important things that you want to kind of remember here right now is that whenever we have a trading range, that pretty much resets the count, as I always say. So we talked about how breakouts like to go 1, 2, 3 legs. So if we do see a breakout going higher, keep that in mind. 3-legged move going higher here will be a really good advantage for you to figure out where those targets are going to be as we go. You know, we know where ideally they want to get to, but you know, it's difficult to get a market to go right to those levels. So just keep it in mind, right? The range is a big clue. When we break out, think about 3 legs, right? 1, 2, 3. Okay, let's talk about that here. Let's get rid of the channel. And keep in mind, guys, this could easily pull back. We go back up, and then we keep on going, right? Because, you know, the same reason why the momentum is very strong as it rolls over is the same reason why that momentum will be very strong as we go higher here. Okay, let's talk about breakouts. There are quite a few breakout patterns. My favorite maybe not favorite breakout pattern, but the breakout pattern that you're going to use the most probably is called the 1, 2, 3 breakout. Okay, 1, 2, 3 breakout. This will also apply to the S&P as well. What's a 1, 2, 3 breakout? Here's a 1, 2, 3 breakout right here. Okay, we're inside of a range, right? Market breaks out, pushes up, pulls back to the moving average, and jumps right off the moving average. Anytime we see a 1, 2, 3 breakout like that, what I'll do is I'll mark up that new channel and I'll buy that first test, right? I always take a quick 1-to-1 first target, move that stop to my point of entry. Again, you're going to learn all the trade management stuff, the entry triggers, how we do it. It's pretty simple. You'll learn that in that free trading course. All right, and you can see in this one, right, didn't go forever, but you'll get at least that 1-to-1, get a scalp out of it, and unfortunately, we kind of went to sleep from there. So 1, 2, 3 breakout. I want to see a new higher high. I want to see these buyers now come in and hold that pullback and jump. Now, keep in mind, guys, right? Keep in mind, new higher high. Buyers try once. Buyers try twice. Yes, right? There's your reversal back into that range. Okay, so keep that in mind for tomorrow. Don't get blinded by the by the shiny higher high there, right? But if they can get that pop up, if those buyers can hold that pullback, and they can give us a good jump off that moving average, don't chase it as it goes higher. Okay, slow it down. Think about where the next support level is going to be. Mark off that high, mark off that low. That gives you your channel. Look left, find those prior swings. And then ideally what you want to do is you want to get underneath the moving average. Okay, grab a trap, grab a failure, grab a pullback combination. We oftentimes will get 1 or 2 of these, maybe not all 3 of them, but you're going to find one of them that will get you in off that low. All right, and again, you'll learn how I use volatility and 1-to-1, right, in that video course I mentioned. Now, remember, in this situation, right, remember, 3 legs, 1, 2, 3. The first leg is the measuring leg. Okay, that first leg will give you an idea of where that final target is up there. Okay, that's one type of breakout. Okay, one more type of breakout, and then we'll go to the oil, because the oil has a few more breakouts I want you to be aware of here for tomorrow. Another one here would definitely be a we talked about the pop and grind, right? We saw that on oil today. Popped up, grinds. What do? You draw that channel really tight, right off the high, off the low. You look left, you get underneath the moving average. That's where the money is. That's where the easy money is, because then bears come in, they try to get short, and you got them right where you want them. Right, you can buy right into those stops. Okay, that's that kind of pop and grind, right? That spike and grind. Another one I'd be keeping an eye on for tomorrow would be that breakout pullback, right? So we see a real strong pop up, right? Real strong pop up. Okay, we don't just pop up, pull back, and go. It's a very strong pop up. But then what happens is the market almost immediately sells off right away. When that happens, keep your eyes on new trend lines, right? Prior swing highs. And look, what I'll look to do is I wait for, again, I'm not a big fan of picking a bottom on that pullback. I wait for sellers to come in, try to commit on that short going back. Remember, anytime we see a strong move in one direction, the odds are so good we retest that high. So when you see that pop up, right, it's obviously a breakout. We know where the market wants to go, and this also applies to the S&P 500, right? Now get underneath the moving average, rope in those bears, get those bears trying to short this thing. I'm always surprised how many people try to call tops still, even with all this information available on YouTube, right? It's like people still do this stuff. It's just because it moves so quickly, right? Pops up, moves fast, and people overreact to it. They don't have a plan to follow, right? Or a mentor to work with like we do in our trade room, right? All those stops now are right above that high, right? You got that big pop up, trapping those bears, and whoop, right back up to retest the high, right? Kind of like a breakout pullback, right? It breaks out, it immediately pulls back. We trap in those bears below the moving average. And again, you definitely want to be looking for a trend line or a prior swing line, right? A hidden channel line, things like that to be using off that area as well. Okay? So 1, 2, 3 breakout, breakout, pullback, pop and grind, breakout. Let's go to the oil here. Let's go to the oil because the oil will have a few more for us. I got another breakout pattern on oil, and I want to talk in more detail about ranges here. All right, guys, but I think we've done a pretty good job here tonight at giving you guys a pretty good roadmap for really any of, either the S&P or the Nasdaq here. And again, pretty much everything I've talked about here today on both of these markets will apply interchangeably. All right, let's go to the oil here and we'll wrap things up here. Boy, do I feel like a buffoon, right? Because yesterday, what did I say yesterday? We have an inside day. Right? Yeah, inside day. So, I came in this morning thinking, oh, this will be pretty easy. We'll mark up our highs, we'll mark up our lows, and then this happened, right? And, unfortunately, we are kind of at the mercy right now of the situation in Ukraine. And this is a really good example of why I always say we are not in the prediction business. We are in the reaction business because, sometimes the chart just looks so easy, right? Oh, this is going to be easy, right? Mark the highs, mark those lows, buy low, sell high, and then the trading gods come out and say, oh, you think you're so smart, don't you, Joe? Yeah, how about this for you, buddy? And they just rip it higher here. This is a pretty easy one today because you can't really see it on this slower time frame. But this was just a classic pop and grind. It was very tight, right? And I think a little bit of this had to do with the commentary that we heard yesterday regarding the peace talks falling apart. The U.S., of course, sending everything from, bulletproof vests to more ammunition to drones to night vision goggles to Ukraine. So things are the whole shaking hands and calling it a day apparently is not going to happen as fast, and I'm assuming this is why, right? That was one of the big catalysts. At the same time, too, we had rollover today, so today was kind of that perfect storm for the market just to run because we were sharing volume. For most of the day today, the 0422 contract and the 0522 contract had about, 75, 80,000 contracts in volume. So it was a really low volume, kind of a melt up market. When the volume is low, you saw it, right? It was very slow, very sluggish. It felt like the market was on like a string, one of those little cat strings, right, that pulls the thing along. So, anyways, it was a classic. It was a classic, basically pop and grind. Just very steep. And so you had to really draw that channel really tight. Really tight. And it literally gave you one pullback, right? One pullback. So, again, if you listen to the video, if you kind of know, if you follow along on this stuff, that was pretty much the only option that we had today. Now, the finishing result here is it's a huge move, right? Almost a $10 move, right? Yeah, 93.5 to 102. So, a $9 move there. We know right away that anytime we see a big move in one direction, what did we always say? We said this yesterday, and we were right about it. What is the most common scenario? Either a range or a deep pullback. So that's kind of one of the first things we notice on this is just the size of this move, right? It's a huge move, right? Almost a $10 move, which is a pretty big move. I know it seems small because of what we've seen lately, but this is a big move. So we should definitely anticipate for when buyers come in tomorrow to say, you know what? Now, again, keep in mind, we are very much at the mercy of the newspaper right now, the headlines that we're seeing coming out of Ukraine in the situation between them and Russia. And so, this could easily keep on grinding higher here. And we'll talk about how to trade that here in a second. But, we should be expecting to see some sort of range, right? And that range would tell us that buyers can buy at support levels below that trading range. Right? Nobody wants to buy high. They wait to buy the pullback. Or we may see a really deep pullback. We might see both. So we see a big move in one trading day. We know the following day is oftentimes going to need some sort of deep pullback to attract in buyers. Right? They're not going to buy way up here. Or some range develops up here. If the buyers who got in up here, right, they're not getting out. Right? They're thinking we're going back to 130. They're not getting out. Nobody dares to sell this market right now because of everything happening in the world right now. So the market just starts to tread water. Well, eventually the buyers will run out of bullets and we can then buy it on the pullback. You'll also see too, we have a spike in channel. Now, spike in channels are, in my eyes, they are probably a top 5 chart pattern that you need to learn as a new trader. And the reason why I say that is because they're very specific. When you see a market spike up like this and it would channel like this, the base of that channel, right? Basically where the channel hits the spike, right there, right? That's where we know, that's where the most reliable entries are going to be. Okay, and the same thing goes for what we saw last night on the E-minis. Don't get fooled by that pullback, right? Don't let that pullback fool you into thinking it's going to be a reversal, right? And we'll talk about what that looks like here in a second. So that's kind of the most important factor right now. We need to get either a deep pullback, right? Or, deep pullback, right? Now, if we go higher here, we get that next big round number at 105 just above us. We've been pretty much going from 95 to 100 to 105. There's a good chance that eventually here we're going to end up settling in around 100, but as of right now, we haven't seen that happen yet, right? We're probably not going to end up spending the rest of the year up at 130. 100 seems to be probably a pretty reasonable spot for us to kind of mellow out here for a while. But in this case, we're still watching to see what happens here on this. So as we pull back here right now, what you want to think about is how deep is the pullback? Okay, for example, if we pull back and we just tap these areas of support, right? This is a great spot here now for what we call a failure into a pullback combination. And this is exactly what we saw today after that big move up yesterday on the E-minis. Right? We trap in those sellers, with a failure pattern. We then grab that first pullback with a pullback combination. We see a lot of these failure into pullback combos. Target is back up to retest the high. Now, here's another variation of that you want to be aware of, right? Let's say something drastic happens. Again, we're talking about rollover right now. The market really spikes down here. Real strong shot lower, right? Vacuums lower. Then at this point now, is that a reversal yet? It's not a reversal yet, right? It's a reversal when they hold the pullback and go, right? Remember, they got to hold that pullback. Now, it's still a bull market, but this is a very deep pullback here. So now this is where you use the 2-try rule. This is a situation where you've got that big bullseye right back to retest the high. You know that everybody wants to buy the dip. But you also know when that move is really strong like that, the bears are going to put up a little bit of a fight, right? They're going to pitch a fit down here. So let them try once, let them try twice. And as I've mentioned in previous videos here this week, there's a lot of variations of this, right? For example, you can use the trap entry, which is pretty much always the best entry you're going to get on that, right? Bears try once, bears try twice. We get just underneath that prior swing, nice strong signal candle, close above the moving average, and you get yourself a nice win. That's almost a guarantee winning trade right there. Right? Again, 1-to-1 for the first target, move that stop to the point of entry and trail it, right, as we go. Now, what you want to remember about these entries is that because the pullback is so deep, right, because that pullback is so far, okay, it oftentimes will kind of sling or snap or short squeeze back to those highs. And so you oftentimes don't get that little pullback right away. Right? We like that pullback right away because it gives you a chance to add more to the position. Sometimes you don't get it though, and you got to go in for a trap entry. These are pretty common, right? These are pretty common. A very deep pullback with that 1-2 failure. We're buying the stops, going back to retest the high, and on the way back to the high, right? We don't get that nice deep pullback like we want right away. We get a little trap set up, right, off of that low. Target, of course, now again, back up to retest the high. Okay, now on the pullback, right? If they get down into our buy zone and the bears come in and hold it and jump, it doesn't seem likely right now. But again, things can change quickly here, especially with what's going on in Ukraine right now. So we come in, we jump now off the moving average. We don't chase it. We mark up that low. We mark up that high. We look left. We find those prior swings. We grab those traps, those failures, those pullback combos. Remember, first leg, third leg is the symmetrical leg, right? Or maybe we simply pop and grind. Once it begins to grind, it wouldn't totally surprise me. We have a pop and grind higher today. Newspaper headlines read something different tomorrow, right? And it pops and grinds lower. Market tight off that high, right? You know the drill. Get that short off that first test. Okay, where do we think these bears want to go at this point? Yeah, they're going to want to go back to that 95. There's that big range that we talked about, right, earlier on in this video, right? That's if we want to buy it as we go lower or sell it as we go lower. Now, what if we go higher here? Now we talked about, right? We talked about a 1, 2, 3 breakout, and I can find a new channel and I can buy that first pullback, right? We talked about a pop and a grind and how we draw the channel relatively tight, right? We grab that first test. We've talked about quite a few of these breakout patterns. Another one is a 2-try breakout, a strong pop-up. And this is the one I think that is most likely for tomorrow because there'll be a little bit of a panic on the way up to that 105. That's why I saved this one for the oil. As we go higher here, right? Strong pop-up, shallow pullback, higher high in price. Traps, baby. That's a pretty good trade right there, right? That'll be a good trade right there. And there will probably be a little hidden channel coming off these lows as well. You know, I wouldn't get too wrapped up in that channel. I don't think that'll be necessary, 100% required, but it certainly does not hurt, right, to draw that trend line and combine that right off that trap, right, off that trend line. All right. And again, keep in mind, we do have some pretty significant resistance up here, right? 105 is a big psychological level right now. 105.75, right? That is that big prior bottom right there. And then, almost forgot. Look where last week's close is. Right there, right at that 107.64. So some real easy milestones here for the buyers right now. The 105, big round number, right? Kind of lump that into the 105.75. And then if it wants to keep going, right, that 107.64 is a really great spot to leave a runner tomorrow. You know, especially if we've got headlines saying, you know, panic in Ukraine or violence erupts in Ukraine or peace talks are off the table or, you know, I'm sure you can use your imagination and think of the different headlines, right, that would have caused this market, right, to spike higher. What you want to remember is that the end of last week, right, last week's closing price becomes a huge psychological magnet, a level, right, at the end of this week. And we see this over and over and over again where, you know, Thursday and Friday of this week, and all the traders start going, hey, where's that closing price from last Friday? Right? So there's definitely some options up there. Again, if we can get this into pop higher here. Let's talk about a range, right? Let's talk about a range here because you got to think, you know, we may not get any new fresh updates here out of Ukraine. How do we go, you know, what if we go sideways here? And we'll finish it up on that, right? We go sideways in a range here. If we go sideways in a range, which would make perfect sense in this situation because it's such a big move in one day, what do? We find levels of support below the range. Okay, and there are really 3 ways to trade a bullish market into a range. First of all, eventually these buyers will likely run out of ammunition. So you want to wait for that pullback. Okay, then don't try to pick the bottom because again, I've told you how difficult that is, and I'm sure you probably have experienced it already. It's probably why you're here right now. Let those bears try to sell short. Right? Let someone else sort of pick the bottom. Let those bears sort of get short here, and now you know exactly where the stops are, and you can buy right into those stop losses. Okay? Where things get really, really good on these ranges is when price breaks below the range, where we can rope in those bears with a failure pattern, again, at support levels below the range, and then we can combine that first test channel as we go higher here. Right? Now, remember, at this point right now, the buyers want to get back to the other side of this range. Okay, so we grab our failure pattern off support below the range. Then as the trade works in our favor, we don't just kick our feet back on the desk and bask in all the money we're making, right? We draw that trailing off that high, we find that hidden channel, and we grab that first test, right? The first test is the best test. We take some profit off at the high of the range. And then where's the objective, right? The objective now is to pendulum swing back to the other side. That's where you leave your runner, right? That's where you leave your runner. Or if the market really starts to punch as it goes higher here, this is exactly where you look for some more of those trap entries, right? Off new channels on the way up to that pendulum swing. Right? Makes sense? So we're buying the deep pullback with a failure. We're grabbing that first test of that new channel. We're grabbing some off at the top of that range. If it wants to keep on pushing, we know where the market wants to go at this point, right? We know that pendulum swing is the easiest way to tell where it wants to go. Combine that with the big round number at 105, and you've got yourself a pretty obvious magnet drawing that price up. Now it's just a matter of getting the entry. right? Finding that, finding those channels and grabbing those tests. Again, I love traps. I love getting underneath. I can't really draw it up here right now. I love getting underneath that moving average, trapping in those bears. You'll see a lot of that in that free trading course, right, in our trade room. So that's how I want to trade this, right, this trading range. And, I wouldn't call it completely off, but it's not unheard of here to think we might pull back, retest, right? And then what? Buyers try once, buyers try twice, run those stops, and back down the direction. That is definitely not out of the picture. Again, we got to wait for it. I'm not going to try to call a top in this market right now. But if we can pull back, grab that buy, take our profit back at the high, buyers start to struggle. Now it's almost easy money going back at least to that low, right? They roll over, gig is up now. We hit that first test, going back down again. All right, guys. So again, you can see I can keep on going. There's a lot of different scenarios that may play out. Unfortunately, I can't keep going on forever here tonight, but that is exactly why I have a trade room. Guys, if you're watching this video right now, you are the person I make these videos for. And if you're this serious about learning this right now, if you are that committed to watching all the way through to the end of this video right now, you will do very well with me in our trade room. So it would be a great idea to get registered. I'll put all of the membership links you guys need. If you're still watching this video right now, I know you're committed. Your commitment will do you very well in my trade room because I provide the entire roadmap, all the cheat sheets and checklists to trade along with us. It's a great place to learn and earn. If you're not making enough money in your trading right now, or you're taking too many losses, or you're making too many mental mistakes, I will help you clean that up here pretty darn fast in our daily trade room. We open up every morning at 8 o'clock Eastern time. I will hopefully see you there tomorrow morning. If not, we'll come back and we'll do it next week, all right? Don't be afraid to call the office, right? We got live chat in the lower right-hand corner there. I can always answer questions in the comment section as well. Hopefully by now you've subscribed to our YouTube channel. Hit that like button. And keep in touch, right? Keep in touch. Great job watching the way through. Hope you learned a lot. Hope I'll see you tomorrow morning at the opening bell. We'll trade some quad witching together. In the meantime, if I don't see you guys tomorrow, we'll be back next week here. We got a short week next week. I'll be out of the office in the afternoons late next week. We'll talk more about that here in next week's videos. But if I don't see you tomorrow morning, enjoy the weekend, and I'll see you back here on Monday evening for the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.